Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for Friday, October the 29th, 2016. This is our pre-market trade plan setup where we take a look at the market macro to micro, drill down to the trade levels, the targets, and create our hypotheses for the day. We create multiple hypotheses in order to have a plan in place for whatever the market throws at us. We do not know what the market is going to do. We can only plan to do what we intend to do once the market shows us its hand. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog, this is not a commercial venture. It's just us live each day during these pre-market sessions and then live trading and analysis during the course of the day. I have to apologize, I've got a cold coming on or something. My allergies are going nuts. So if you hear me sniffing a lot or sneezing, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metric. All right, let's take a look at yesterday. Yesterday, our main hypothesis was a move up, failure up here, and then continue down towards that, this is the Globex, sorry. Our main hypothesis was our main hypothesis was a open auction out of range, a move down, and then somewhere in here, a rotation back up and continuation up towards that 44.30. Our secondary hypothesis was a open auction out of range, failure to get above that 43.75 and then rotate down through into the naked VPOC chop and then continue down lower into the lower distribution. And basically that's what we got. And then Hypo 3 started kicking in with the continuation down towards the 2050 naked VPOC, but we didn't get any continuation. It was actually a pretty tough trading day. We had a very wide IB. We made a huge move early, and then we chopped around, then rotated up into the key line in the sand. Remember yesterday our key line in the sand was 35.75, and then we failed to get above it. Looked like we were going to break that IB, and then they rotated back up twice and started banging on it. And then later in the day, we finally had the move to break the IB, and we broke the IB on the cash close, which is very rare to see. But we did get our move down. We didn't quite get to the 2050 naked VPOC. Overnight session, we basically chopped around in the lower distribution. For most of the everything until we got into the European session, and then the European session took us down to the lows of the night down at 16. This is a significant level. I'll show it to you on the composite. And then we tried to bounce, came down, put a higher low in at one tick above the prior high, and rotated us right back up into balance, chopped around. News came out, and we went in and put a double top on that news. The GDP news came out, and we rallied. It was a fake rally to the upside, and then they sold it off, came right back down to the VWAP, and now we're working back up in this distribution here. The news on the day, we did have advanced GDP quarter over quarter, 2.9. It was a nice beat off of 2.5. Advanced GDP price index, 1.5 versus 1.3. And we came out at employment cost index as expected, and as previous as well. 10 o'clock, we've got University of Michigan consumer sentiment and expectations. That's the only other big scheduled news. Of course, we've got the U.S. race election coming in, and it's causing all kinds of oscillations and being stuck in this balance. Let's take a look at the macro to the micro. I use a simple candlestick chart with the 9 EMA, 20 SMA. I'm looking for slope and separation for strength of the trend, where the trend is being violated or challenged. And in the monthly, beautiful multi-year upward trend, challenged at the end of 15, beginning of 16, took it back. Now we're sitting on top of the 9 EMA. It's sitting right at that key line in the sand at the 2106, 2107 level. We do have a possible falling 3 setting up here, which means we could come down and then create a big rally that would signal a continuation. But right now we're in this downward trend on the monthly, but not challenging the overall trend, which is still up. Going to the weekly, you can see that we've got this MA squeeze going on right here, where we've got the 9 and the 20 coming together. We're in this consolidation mode. This is typically a inflection point of either a strong move up or a strong move down. We do not know which way, but I wanted to show you this on, and this is actually a fairly rare chart pattern. You've got you've got this three high test to the high with a rounding top, and then coming down and testing it, and you can see that we've got this upward trend line on the daily, and then this what was resistance is now turning into support. So we have to be careful, at this junction right here, because if we get below this this lower trend line and close below it, we could have a stronger move down towards what is going to be the next support level down here. And that brings us back down into the 2000s. And if we get into the 2000s, I'm looking for a move down to that 2080. So just keep this this pattern in mind. I'm just going to get rid of this here for a second. So going to the daily, you can see that we are starting to get this downward trend. We have a possible inverted cup and handle setting up here. Well, the cup, not the handle yet. But we're definitely in a downward trend with a pretty strong trend line that we're below right now, and that takes us up into that 53 area, and as strong resistance. And you can see we're just creating what we've seen, a lot lately is these these wedges, these symmetrical triangles setting up as we compress and get ready for what is likely going to be the move on the election coming up next. Is it next week, the election? Yeah, I believe it's next week. Okay, so let's get rid of this drawing. Sorry, I'm kind of all over the place right now. What am I trying to do? Get rid of drawings. November 8th. So when is November 8th? A week Tuesday, right? Okay, so not next week, but a week Tuesday. So you can see we're definitely getting a downward trend on the daily. Going to the intraday, you can see that the trend is accelerating to the downside on the daily after trying to rally and failing yesterday during the RTH session, and then we've got continuation. We've come up and we've challenged the 9 from below and rejected. So the trend is definitely down on the 4-hour. Coming into the 30-minute, we did rally off of that 2116 and put in a Mr. Sneaky. Came down and got below the 9 and the 20, and then immediately rallied back up. So we've taken this this trend had challenged it, which was to the downside. Now we're above it, so we're starting to get possibility of a trend change. I can say that. We do have a naked cross down here on the 15-minute at 21.2275. Currently right now, we started this upward trend, but we came down and challenged it in the last 15 minutes off of the news, and now we're taking it back, and we're getting it back above the 9 and the 20, and coming up towards the overnight high, which we have a double top on right now at 29.50. And then finally going to the 5-minute, you can see that we did have a downward trend, put in a Mr. Sneaky, and moving up. Actually, it was a FUBAR, Mr. Sneaky, tech gap, and now we're above the 9 and the 20, and coming up to see if we can challenge the highs overnight. Okay, and there's my gold signal going off. Hold on a second, I'm going to put a gold trade on. Okay, so let's take a look at the composite. All right, so the big picture. So from this gap up, and I'm going to go back a little bit here. So for most of 2016, the first half of the year, we're in this balance here in this distribution zone that has this blunt area with a lot of undetermined fair value. And the composite, going all the way back to the 2013 year start, the most traded price is down here at 2035.50. Then we gap up, okay, on 07.8. So we gap up on July 8th, and we come up and we start working our way up. And the first area that they accepted value after the gap up was right here at the 2016 area, the 2015.75. And then, of course, we move our way up, okay? We create this value area between 65.50 and 24-ish area, and then we move up and we gap up again, and we create this, this value area up here. Then we come back down, we fall out of this balance, we come back down here on 0909, test this, this 16 level again, find value, work our way up, we accept price right here at the 21.29 area, and then we gap up, we break out of that balance, come up, and we're trying to break out of this longer term value and get back up in here, but we get this abandoned baby. And they're not able to hold it. They gap down, then we gap down again. And then when we try to work our way back out again, we fail at the essentially the value area high of the longer term price and reject, okay, the value area low of this area up here in the 67 area. And then we tried to hold value here for a period of time, and the last accepted price is 53, which is the microcomposite VPOC, the most accepted price going all the way back to the start of this move. We fail to hold that, and then on the 11th, we fall out of that, we come right down, we come down and we test right down through the lower side of this balance and test 2107. Strong buying comes in, we work our way up, okay, and then we start accepting value again where we accepted it, okay, last time where we tried to make the move up. And then we tried to break out again, we can't, And we just start chopping around, chopping around, chopping around. And then we continue to reject and are unable to hold above the key line in the sand, which is the 2144, 2143.75. I'm using 2144.50. And then, we have a 3-day microcomposite VPOC at the 37. And then we have a bearish engulfing day. We take it all back and we come back down and test the value area low in the RTH. And then overnight, what do? We come back down to where it all started again, down in the 2116 area, and start working our way back. So the key today is the fact that we've got in the RTH session, we had a bearish engulfing day, and basically, took back, everything in the last little while and coming down near the lows and tried to break out, and now we're coming back up and we're trying to find balance in around this 2127 area, this CHVN. So taking a look at the overnight, we have an overnight high of 29.50. It is a double top. And of course, we are trading near it. We could go up and do what we've been doing a lot of, which is a make and break of the overnight high or low. And then our overnight low is way down here, okay, at the 2116. Now, we have a couple things to take into account today, because it is the end of the week. We have 1 day left, and our weekly ATR is running at 47.2875. So our weekly ATR to the downside off of the weekly high at 49.75 is down here at the 2102.50. Now our week open is 2137. So if you look at the weekly critical mass and take 2137 and deduct the 20-day ATR of 1945, our weekly critical mass now becomes 1675. What does critical mass mean? Critical mass is a theory that on a weekly basis or a monthly basis, if you get beyond the number of days left times the 20-period ATR, that one side will capitulate and you'll get acceleration into the end of the period. On this case, our weekly critical mass, weekly open of 2137, less than 1945, takes our weekly critical mass down to 2116. In addition to that, we have 2 days left of the month. We have today and we have Monday. Our monthly open is 2158.75. So taking the 2 days left, or 2 times the 20-period ATR of 1945, that's a 38.9 2-day left to trade, and our monthly critical mass is now 2119.75. So we'll actually hit critical mass before we hit it on the monthly basis, before we hit it on the weekly basis. And we've already tested it one time in the overnight session already, but we've taken it back. So right now we're going to open up in range and in value. We have a very blunt profile. I mean, a lot of ugly profiles lately, just really fugly. We've got, we see all these double distributions and triple distributions, and this, I don't even know what to call this, other than, toothy. But we're holding back inside of value again. So what we need to do is send that to the back, and one of our trade areas is going to be the 27. We have, again, in the Globex, we have a double distribution zone with the mid and the LVN from the Globex at 22.75, which just happens to be one tick in front of the range low from the RTH. So this becomes our key line in the sand. Oh, why do I always do that? And then above us, we've got the overnight high, which also happens to be a weak high. So double top with the naked VPOC up here at the 3150. I thought they were gonna shift it down to the 27 area. They didn't. And then we have the value area high up here at the 2134. Remember that 35 was our key line in the sand, or a warning line yesterday to the upside. That's our daily ATR up. So I'm going to be watching between the 34.75 and the 35.75 as another warning line, because I think if we can get above that, then I'm going to be targeting. I'm just going to move this, get this out of the way. Oh, wait a minute, before we do that, let's get the Globex VPOC. Globex VPOC is going to be the 2750, which, you know, basically I thought it was going to be that. So our overnight VPOC is sitting right at our value area low, and the HVN from the lower distribution from yesterday. Okay, and then above the 35, we have this 39 area and this 37 and a quarter. I'm going to be using 37 and a quarter as my target above the warning line. It was also the 2 times the VWAP, and then above that we've got this 39 area, which is an LVN, and the range high from Wednesday. And then above that, we've got the 41 and a quarter. There's also that 40.75. That 40.75, we keep coming back and visiting it, and that's the value area low of this smaller microcomposite right here. And then above that, it's going to be the 43.75, the 44.50, and then above that, I would be targeting the 47.50, and of course the next big target above, which puts us right back into this longer term balance up at 53. But I'm starting to think that 53 is not going to come into the cards before we come down and test these lower areas. I mean, it's just my guess. I could be totally wrong, but man, we keep rejecting getting back inside of this balance right here. You can see, 1, 2, 3, 4, 5, 6 times we failed to get back in after testing it on these 2 days here and failing. Okay, so those are my levels to the upside. To the downside, of course, we've got the 2050. A very important level is the 24 because you have the overnight low. But I'm going to put a warning line here at the 24.75 because I think if we get below that, they'll push through to test the 2250. So I can trade below that 24.75 if it sets up. And then, the main target below today is still going to be the 2050. And then we have to start watching for our critical masses and our overnight low, especially if we leave this 2950. I don't think we are going to. But if we do leave it alone and we get below this 2250, we've got to be thinking that we're going to come down into the 16. And then we have our daily downside ATR target is down here at 2110 off of the overnight high of 2950. And then our October month low is down here at 775 with our key line in the sand, and anything below that we can start looking for our weekly downside ATR target, which we have not hit either or on the week. Our weekly upside or downside ATR. Our weekly upside ATR is actually all up at 70. Sorry, that's critical mass 55. Weekly ATR off of the new low at 16 is up here at 2163.75. And then below that, we've got the key support at 21, and then we're back into the 2000s and 90s. So what is my main hypothesis? We're going to be opening up in range and just outside of value. So I'm looking for an open auction in range, a move up to take out the overnight high, maybe even take out the VPOC, or even a failure to get back inside of value or a false breakout. But somewhere between 27.50 and 31, I'm expecting to see initiative sellers step in and rotate us down and start making our move and continue our move, chop around between the 24 and 22, and then break and hit the 20.50 as our main target, and then fail and push through to the overnight low and go down and put a lower low in below the 16 and come down somewhere between the 2010 and the 2107. So the main hypothesis, hypo 1, is open auction in range, failure to get back inside of value, or get inside of value and take out the overnight high and the VPOC, and then rotate back down through value, break through the 24, chop around the 24 and the 22, then fail, come down and hit our main target at 2050, and then get a continuation wave down into the 16, maybe even down into the 2110 to 2107. That's my main hypothesis. My secondary hypothesis is an open auction in range, a move down, failure to break below the low, or come down and get a false breakout and take out that 2050, and then find buyers and rotate us back up through value into the 31, and then chop around here, pushing into the 35 and closing somewhere between the 35 and the 43. So that's hypo 2. Hypo 3 is an open auction out of in range, I should say. Get immediate failure, push down, chop here at the low, and then fail, push through to the 20, right down into the overnight low, fail, and push through, and get a continuation day off of this bearish engulfing, and moving down and coming down and testing into the 2100 and closing somewhere down here in the lower 2100 area, maybe even dipping into the 2000s. So that's hypo 3. And then hypo 4 is an open auction in range, a failure to break below, a move up into the 35 area, trip through value, chop up here, push through, come up into this 43, and get a rally into the weekend up into the 53. So those are my 4 main hypotheses. It's Friday. Anything can happen right now. I'm actually expecting it probably to be a light volume day. So I think if we get a direction going, we could just slowly creep in that direction. But there's a lot going on. Just make sure that you're not risking a lot today, as it could easily get you in trouble, and it's no fun to go into the weekend with with a loss. I'm sorry for the length of this, but there was a lot I wanted to cover. So as always, trade well, trade safe, and we'll catch you on the flip side.